What I'm going to do today is I'm going to go over and I'll tell you a little bit about my bio in a minute. I'm going to go after what's called my morning pre-market wake-up trade. I'm with Traders Den 24, and there's a number of us who trade in there, and we basically just show what we're doing, and people follow along with us, and most people are very happy with it, and each of us do different things. I also trade options as well, so I am a clinical psychologist, been doing that for 29 years, and I'm also a futures and options trader, and I've been a national mentor, and I also have done quite a bit of teaching. What I like to do with this presentation, and I try to keep it simple and straightforward, is to talk about income generation and option day trading. So generating income with futures in the morning and then set up for an option day trade. And we'll get to that in a minute. A little bit about myself. I've been a clinical psychologist 28 years. I guess this December will be 29 years. I've educated people, supervised other people for licensure, doctors and mental health counselors. Also have mentored traders, and I've also am called an option strategist. I always don't like to think about myself like that. I just think, hey, I know option strategists like to trade options, but people say you're an option strategist. I've tried to be recruited, but I like what I do. Anyway, I've been trading with a number of different packages. I use NinjaTrader. I've used Thinkorswim, depending on what I'm doing, whether it's a stock or an option. And I've won some awards. These are just the trading awards. I've also won psychological awards as well. Probably an overachiever type A type of person. And one other area that I have a real big interest in is this special interest in enhanced human performance of traders. I'm actually looking at brainwaves of traders. In fact, I am at a brain conference here in Atlanta. It's called the SABA conference, where they look at magnetic stimulation of the brain and neurofeedback and things like that. And I've actually been developing a portable unit to help enhance traders. So it's very, very interesting. So I've got these side interests, and I'm a trade moderator in the mornings for Traders Den, and I usually hang in there most of the morning, see patients in the afternoon. Briefly, I'll let you read the risk disclaimer. All of this is risky, as you know, and we try to reduce the risk for you as much as possible. Most of us are very, very good with risk management, very, very conservative. I actually consider myself a conservative trader. And also, when I do options, I'm often having a hedge with my options. So very, very safe type of trading. Now, today what I'm going to be doing is, like I said, talk about futures trading in the morning. And at Traders Den 24, we trade 24 hours a day, and I'll talk about that toward the end. But I just want to go over a little strategy that I have found works real well for me for quite some time now, and this is early in the morning, and a lot of times, if you're talking about Eastern time, it's between like 6 and actually 6 and 8 Eastern time. I'll even go to 6 to 9, to be honest with you, and 5 to 7 Central time. And so what I always tell people is look at the daily charts and then look at the hourly charts. Now, I won't spend a whole lot of time with the daily charts because a lot of people have already talked about charts here and longer term trends. One thing I will point out from this morning, I don't have this morning's chart, but I noticed very clearly this morning that when the market came down, we were coming down toward a 200-day moving, I'm sorry, a 9 exponential moving average and then a 20 on a daily chart. And a lot of times that becomes support, particularly when you have news like we had in Baltimore that likely had some negative pull on this market, because we know Apple did okay with their earnings. So one of the things I'll talk about later is how I'll actually do a futures trade in the morning and then set up for a swing trade or a day trade in options during the day, and they both turn out to be very well. So the first thing I want you to do is think about the hourly chart. Hourly charts are very important. And there's a number of moving averages you can use. The ones I like to use is the 200. I think the 200 is a very significant average. And here I'm looking at it on an hourly chart. We'll talk about it on a 2-minute chart in a few minutes. And so what I tend to like to look at is a couple of things. I like to look at the 200-day simple moving average, and I like to look at the point of control. Now, simple moving average, I say day. If it's an hour, it'd be 200 hours. If it was a minute, it'd be 200 minutes. So it's really the time frame that you're looking at with the chart. So if you are using any kind of charting software, this one I think is from Thinkorswim. I also use eSignal. I also use Ninja. Whatever I'm using, once you get used to charting packages, you don't care anymore, and I kind of at that point. I just set them up, and it's easier to set up these particular setups. In fact, in the room, if anybody has Thinkorswim or swim, I actually give them this whole setup I have so they don't have to reprogram, reinvent the wheel per se. If you have noises in the background, I apologize. We're in a motel room and my kids are coming in and out, so there'll be little clicks and clacks if they come in the room, but try to keep it as quiet as possible. So the 200 moving average is important, and again, it could be daily. It's the simple moving average. We'll talk a little bit more. And then the point of control, and this light blue line, I have them in white on the other charts. That light blue line there is the point of control. And if you look at this blue pattern here, this is actually the volume profile. And essentially what the point of control is where most of the trading has occurred during a particular time period. Now here you see, if you can see this legend on the bottom, it's basically a week from Sunday to Sunday. And you can see over that whole week on a 200-day moving chart, or 200-hour, on an hourly moving chart over 5 days, you can see that the point of control is right here. So it's around 252.25, and this was done maybe these slides about 2 or 3 weeks ago. I can't remember, but that's real important. So what I want to point out to you is, like, today was an unusual day because we hit a high this week, and then we pulled back, and we went back to what first I believe was an 8 or 9 exponential moving average, and then it went to a 20. And you'll see these pullbacks, and during the day when they reverse, and if you get a nice reversal and you get a nice reversal in a candle, this is not a daily chart, but you kind of look at this reversal right here where you see that first green arrow. As it comes around and starts turning positive and these moving averages start crossing over, that's a time where you might say, if you're hitting a support on a daily chart, that looks really good. And actually it became very good today. It was a very nice option long in the SPY. I did not take that trade, however, because I was getting ready to leave and take a shower to get to Atlanta. So I missed a lot of trading today, which was unfortunate. It was a great day for trading, in my opinion. But anyway, so when you're starting out your mornings, become familiar with the hourly chart. It's real important to me to look at least back about a week and look at that hourly chart, see where the 200-day moving average is, and see where the point of control is. And it's interesting, if you look at this point of control, notice how you can see the price here, the candlesticks are kind of dancing around that. So again, you might see a different pattern, but I would always encourage people to look at that 200-day moving average, and then, or 200-unit moving average, whatever you want to call it, and the hourly chart. So I always like to look at an hourly chart before I do anything else. And a lot of times, if you're watching it every day, you've got a pretty good fix on where things are. Now, this is the particular thing that I like you to look at with what I call Blues pre-market futures trade, and it happens over and over and over again. I kind of put this trade together from stuff I found out from guys from Chicago, other information I found out from other places where I've learned. I mean, I've been doing this for a long time, and I just found out that this tends to be a very reliable trade every morning. And I'll talk more about this in terms of how you get a piece of this. But what I'd like you to do, if you want to look at this particular trade, is first of all, you kind of look at the following thing. You look at where the market is on the futures. And this would be around 5 Central or 6 Eastern. Now, some people get up a little earlier. A lot of times for me, I get started around 6:15 Eastern time, just because of my weird schedule. I actually would prefer to be there around 5:30. In fact, if you can get up 5:30 Eastern time or about 5, and actually better 4:30 Central time, that's a perfect time to start to monitor this trade. Now, sometimes it's a fast trade. Many times it's a very slow trade. It's almost a boring trade. But here I'm not looking for excitement, I'm looking for cash. So what you do is you look at the price, or what we call the spot price of the futures market. In this case, we're looking at the E-mini. You can also look at things such as the bonds. In fact, the bonds give you really nice trades during the morning. So you can apply this to other markets. I'm just looking at the E-mini here because I feel like it's a lot of people know about the E-mini, and it's the easiest one to kind of focus on. So we want to see where the market is, and then we'll look at the 200 simple moving average, and then we want to look at a point of control and use a 2-minute chart. Now, it doesn't mean I don't look at the daily chart. I do look at that hourly chart to get a basic idea of where the markets are or where they've been, but then my primary purpose is to look at that 2-minute chart, and I trade off that 2-minute chart. Now again, this is dominantly in the morning when the market just starts. Later on, You could do this trade really even up into the cash open if you want, and sometimes it takes that long. A lot of times these trades tend to happen between, I'd say, around 5:45, 6:15 Eastern Time to about 8:30 or 9. Sometimes the news at 8:30 pops it the rest of the way. And we'll go through this in a little bit greater detail. But the only things you have to look at is the 200 moving average, which is simple, the point of control, and the 2-minute chart. And most charting software should be able to give you a volume profile, a point of control, and moving averages. Most of them do that. If you have any kind of trading platform, it will do it. So one of the things that you do as you're doing this trade is Europe opens up. So you don't have to be at 2 or 3 in the morning to see what's going on, but you look for what I call extremes after the European Open. Okay, so what you do is you get up, let's say 5:30, quarter to 6 in the morning Eastern Time, depending on which time zone you're in, and you check to see the early U.S. morning up market. And you look for what I call extremes. So it would be like deviation. So in the other chart you saw that we deviated on the hourly chart far away from the 200 moving average, and we came down to a point of control. Now it won't always be at the point of control. Sometimes the 200 moving average and the point of control on the 2-minute chart are right by each other. But what I look at is extensions either above or below that 200 moving average. Okay, so what I do is I first see, okay, what happened after Europe? Did they pop up and then go to an extreme at the top, or did they drop down and go an extreme at the bottom? And then I look for that market approaching that extreme. Now, one of the things that you will become aware of is you may not always be fully conscious of, okay, well, when has it finally reached that extreme? What you want to do is look at that hourly time frame, or look at even possibly a daily time frame. It will give you an idea. Basically, we're talking about supports and resistances. It'll give you an idea where that extreme is going to occur. Now, you don't just jump in when you think there's an extreme. You wait till either it's a prior support or resistance, and it typically would be a prior candlestick, above the 200 or below the 200, and then you start thinking about, okay, is this thing starting to turn around? And you give it maybe a couple of ticks off that extreme. Sometimes it'll actually pull back to that extreme and then go again. And you kind of get an idea when you're watching this. As you start to look at this, as time goes on, you start to get a feeling for it. I would suggest a lot of people just monitor what I'm talking about a week or two and get a feeling for it. You will, in a very short order, want to do this trade because it's a straightforward trade. So I'm actually teaching a trade. I'm not really trying to sell you anything on this. I'm trying to teach you something that's, I believe in playing it forward, and this has helped me. So let's say we have a high of the early morning. Let's say that the market put in a high. We look at what happened in Germany. Everybody was happy. Everybody felt good. And it goes up. The market goes up above that 200-day moving average. What we want to do is start considering shorting futures or short selling futures. So let's say it's E-mini in this case. What I would do is I'm on that upward extension and I say, okay, I see it's rolling over. Let me go ahead and short sell these. The same way as if it went down, look for the low of the early morning and consider buying long futures. So very, very straightforward. You're either going long the futures or short the futures. Let's see, experiencing networking to improve performance. Please close. Okay, I don't have any applications. I'm going to make that click down. And hopefully everybody can hear me okay. I've got this closed because I'm doing kind of a dual monitor here. Let me come back over. All right. So you're going to check the early market early in the morning, and then you're going to do what I just told you, and then here now we're looking at those 2-minute charts. Now you can see right here, here's 5:30, and again this is Central Eastern Time. And notice here, here's my 200-day moving average, here's my point of control, and notice where the market. So this is an example of the market going in extreme toward the bottom. Now notice that it kind of goes to that extreme, and it'll be anywhere between 5:30 and 6:30, oftentimes between 5:30 and about 6:15, right in here. And in fact, if you like your patterns, that's like an inverted head and shoulders. So when you look at that type of thing, you'll start saying, okay, this is interesting. I'm seeing it putting in a low here. So as I see this thing kind of turning around, I could anywhere in here, and what you would typically see if you look further back, I can't show you here, you would actually see an area of support. It might be a low from a previous day, it might be a low from the day before, and then you can play off of that. All right, so you see that turning around, and you can wait till it comes here. Typically, you know, like I'll wait for maybe a point or so of turnaround, and here I'm seeing I put in a low, and actually this package, this is from Thinkorswim. By the way, I don't trade futures on Thinkorswim. I trade options on Thinkorswim, but I use this chart to look at. And so we see this little turnaround coming here, and actually if you can see these little green arrows, there's actually a little green arrow that shows up here. Now, you can't go completely off of that, but when those arrows show, notice what happens. And they won't show immediately, they'll show a little later on. So that arrow doesn't happen right where it hits here, it might show like right here. But these arrows, and they come from the Trade the Market guys, and they're all free. All these indicators are free, by the way, on Thinkorswim, and I think on most of these packages now. If not, you can get them. I think Ninja has them as well. But basically, you'll see this turnaround. I even get the little green arrow to help me. Notice my volume down here, too. Notice there's some interesting things. You kind of get the sell-off volume right here. You see where there's that higher volume. So here's kind of your average volume with that purple line. And you see my sell-off volume. We come down here. And then all of a sudden we get these green spikes after this green arrow occurs. And I'm also getting a moving average crossover. By the way, I believe this is the 9 EMA and this is the 20 SMA. And so though you can see those two coming right in through there. And so now you're getting a crossover, and a moving average crossover is an indication too. And what I'm looking for, remember, is I'm looking for this extreme, and I'm looking for it to climb back up to that 200-day moving average. Now this is an unusual circumstance, doesn't happen every day, but sometimes it does. Notice where my point of control is. Point of control for a trader is kind of like a magnet for the market. It's where most of the trading tends to occur, and the market tends to get pulled back up to it. Now the neat thing about this is I've got my 200-day moving average and my point of control kind of near each other. They're above where we are, so that even gives me more indication that this thing's going to come up. Now sometimes the point of control will be below, sometimes the point of control will be above, and we'll talk about that in a bit. The simplest way to do this trade is just to watch for the extreme. It usually happens between 5:30 and 6:15. You then enter the trade. You can put your stop right here, so it's a very, very tight stop. What I like to do, I'll just talk a little bit very quickly about the way I like to do risk management. What I like to do is get in there. Let's say I took my entry here, and then put my stop right below the candlesticks, or I might even want to go below the low. Usually I feel pretty comfortable below the candlestick. And as soon as this thing starts moving, I will immediately move my stop to one tick in the money. Okay? Now, why would we do this? Well, if I'm doing 10 contracts or a 10 lot, I'm always covering my trading fees, and I'm always not risking anything, basically. So my risk management that I like to do, if it happens, my first stop would be below the candles. Remember, it's a 2-minute chart. My second stop, as soon as it starts moving, is one tick in my favor. Okay, so, and typically your ideal is 10 contracts, but you can do this with 3 contracts. I've even done this with 1 contract. It's fine, and you can roll contracts off as you go along. So basically, we get in, we put our initial stop in, it starts moving, we slide our stop up, and you can even bring your stop up further if you want. You know, you can have a trailing stop. I like to manually set my stops, by the way. So we get it. Starts coming back up, and you can see, and this is a typical day. Notice how it kind of climbs, and then right around before 7, sometimes it'll slow down, then it'll follow through again, and notice how before even 8 o'clock in the morning, we've already hit the 200-day moving average. Now, you can do 2 things. You can take the whole trade off at that point. You know, that's not a bad run. Let's say we got into at 2042. And we get out, let's say even 2048, let's just use that. That's 6 ticks. Well, that's 6 points. That's 24 ticks. Multiply 24, and each lot you do is $50, so it's 24 by $50. So every time one futures contract moves a point, you make $50. So if you get 10 futures contracts, you're making $500, and you multiply that by the difference here. So it'd be, 500 times, around 6. So that's $3,000 for the trade. And you could be done there. And a lot of times my preference is to exit at that point, and then watch later on to see if it by the way, later on it'll often follow through. Now see how this is weakening and how the moving average is pointing down? But sometimes you'll get a reversal and it keeps going up. And you can either keep 3 of those contracts, or you can just keep moving your stop up and keep all 10. A lot of times, either before the market opens or after the market opens, this will actually break through and go back up. Because notice where your point of control is. That's the magnet. And notice where all this volume is. So, and this happens over and over again. So I call this the extreme reversal trade. You go long if the spot market is at or below the point of control, okay, and we were, notice the point of control was above us, and the spot market, or where the futures are, is below the 200-day moving average. On a 2-minute chart, that's very important. Consider buying the long. Your risk is very limited. Your reward is very high. Now again, if news is coming out, there's always caveats to give you. If news is coming out, and you know news is coming out, don't jump into this trade before the news, because if the market's been weak, and if you're in a downward trend, then you might want for this thing to have pulled up above the 200-day moving average and the point of control, and do a short into it. So you have to kind of know what the
Hey Frank, we're not getting any audio from your end. Can you do me a quick sound check again, please? Yeah, it seems so. It seems like your audio went out just for a second. You want to try to reconnect? I don't know if you're using a VoIP, if you're just going in over a mic, but you want to try to unplug it if you're using a mic, or just call back in if you're using your phone. Just hang tight, ladies and gentlemen. Shouldn't take more than just a minute. These things happen during webinars all the time, so shouldn't just be a minute. Yeah, Frank, I think if you unplug your phone, or not your phone, but if you unplug your mic and then just have it reconnect to go to meeting, it would do the trick. Or if you're using your phone, just hang up and then call back in, and then I'll do a sound check for you. Hey, Frank, can you hear me? Frank, I think you're good now. Can you give me a quick sound check? Frank, I can hear your computer in the background.
Can you hear me now?
Coming through perfect. Sorry about that.
No
Somehow it just stopped recognizing your audio.
When did it stop? Did it stop on the slide I'm on now?
Yes.
Okay, I'll just re-go over. All right, thank you. All right, so basically, as I was saying, if you're at that extreme, if the market itself is at or below the point of control, and it's below the 200-day simple moving average, or you could be below both, consider buying long. That was kind of like the example we just saw. You can consider going short if the spot market is at or above the point of control, okay, and is above the 200-day moving average on a 2-minute chart. Consider selling short. Now, also, that blue area that I showed you, which was the volume profile, you can also look at a volume profile chart, and often those volume profile charts will help you with the point of control and looking at that. Some of our other traders that I trade along with, they use Renko charts, and they really like the Renko chart. So you can even look at Renko or volume, and Renko is a volume-based chart versus a price-based chart. And a lot of times you can actually use the Renko to find your point of control. I'm trying to keep it simple using price, but you can use the Renko charts as well, and a lot of times you can get these with your charting software. All right, now, one of the other things I want to make as a point is this is not as effective after lunch. So what I wanted to show you is notice how we saw that kind of nice trade in the morning, that nice long trade. Look what happens in the afternoon a lot of times. Things start going sideways, and notice that the 200 simple moving average and the point of control are kind of together. Now you can see where we have a volume profile up here where the market kind of went back up, but you can see it's, and that's into the close. A lot of times doing this after lunch is not as effective. So my way of trading this is to trade this futures trade early in the morning. You can even trade it into the cash open, and then start considering looking at an option after the cash open. I like to very simply, you can do the SPX as well. I will just simply do a SPY or a SPY put or an SPY call. They're not hard to trade. Do about 20 contracts, jump in there, and a lot of times when you get a movement like you did today, we hit a bottom, I think it was at 87, and we came right back up, and it was really killing me because I was looking at my phone and it had already happened because I was driving to Atlanta. Traffic was heavy, and I'm like, oh my goodness, that was a wonderful trade for the day. But again, don't use this technique in the afternoon. It doesn't work. This is only a pre-market, and you can even call it a little early cash market trade. Now, here's the cash market or the swing trade. Notice my time frame again. Here's 8:30 in the morning Eastern time, and we're going to noon. What you can do, and you cannot trade options. The thing about options is you can't trade options until after the market opens. Now this is the same chart we were looking at before. If you remember, the market came up and then it kind of double touched and then it came back down. What you can do is watch for a follow through back to the upside on that long you had. Now what I'll often do is I will either trade a future and continue that way, so see how the point of control is above the 200 moving average, so I can ride it from the 200 moving average up to the point of control and even higher, just keep moving my stop up. Or what I often like to do, if I feel like there's going to be real momentum, then what I'll do is I'll buy a long option. So I'll just go ahead and buy a long option call. A long option call. So that's my preference later in the day to go long options. So who is that calling? Okay. All right. You might have to push a button on that phone there. Sorry, we're in a motel room here and I don't know who's trying to bug me. So just leave it off the hook. If you leave it off the hook and it won't ring again. If it starts beeping, put it back on. Sorry about that, folks. Okay, so again, I would have gotten out, but I could actually have stayed in with a portion of it. I like to get out when I hit that 200, unless it really looks like it's pushing through. If I get one of these green arrows and I see a couple of candles down, I'll get out and just take my 10 ticks and run. I've had my morning before the market even opens. Or what I'll do is watch for a pullback and it starts to follow through again, and then go long some options again and just ride it again. And again, you can see you got a couple of points in there. Another thing I'll do is if I have to leave, which I usually don't till later, I'll do an option. So typically I'll trade futures early in the morning and sometimes through here. Sometimes I will take an options trade too and actually just day trade an option. What I'll also do is if there's a pullback like this and you see that triple bottom there, if I see patterns like this, I will sometimes go in with an option long and go in here and just put my stop below here and do like 20 call contracts and just let's see if thing keeps running. And a lot of times, and I have to leave for my office by 11:30 at the latest to go see patients at 12. So I've got this option trade going on. So you see how I'm kind of double dipping. So that 2-minute trade is good early in the morning. The 2-minute trade is good after the cash open, as you can see in here. And then you can also get these follow-through option trades. Sometimes I'll wait to see if it gets other bottoms. If it looks real strong, I'll just jump right in my option trade and do a day trade on the option. I will typically get out of these options before the close of the day, unless sometimes I think there's a follow-through, then I might if I usually do 20 contracts, I'll keep 20 and I'll let 10 of the 20 go. So again, that's the way we can actually do day or swing trades with this. So the cash open can result in a continuation of that particular trend. So again, we would consider long. If after the cash market opens, we'll consider either remaining long or initiating a long from that 200-day moving average to a point of control on a 2 to 3 minute chart. You can even use a 3-minute chart once the cash market opens. And you can either buy the hold that future that we originally bought or a portion of those futures, or you can buy again. Just the reverse. You can think short. If after the cash market opens, you can consider remaining short from that 200-day simple moving average or 200 simple moving average to the point it's a 2-minute moving average, actually. 202 minutes, so it's actually 400 minutes. It's really what we're doing is we're just calculating an average on whatever time frame we're using. I always throw out day because I'm so used to being an options trader and thinking about, days versus minutes. But I do this with the futures all the time. So to the point of control, so you basically just, again, consider remaining short when it hits that 200 and just go to where the point of control is. Again, on a 2, some people like to use a 3-minute chart. They like to have a little bit longer time in there. That's fine. Or you could sell the future again. Now, the spot market can chop around that 200-day or the 200 simple moving average and the point of control. So sometimes, as you saw just a few minutes ago, after a lunch or after the morning, all it did is just chop around those. They tend to be magnets. That point of control and that 200-day simple moving average on a 2-minute chart tends to be a magnet. And when you change the time frames, it's not as effective. It seems to be the 2-minute chart. I don't know if that's the way they set the computers. This was just drilled into me by some guys in Chicago that I knew who were traders, and I kind of learned this over time. They just told me that 200 was very important and the extremes were important. So always remember that the 200 is even more important than the point of control. It's that 200-minute chart, if you will, that 2-minute chart and the 200 simple moving average. And so you can see how simple this is. Now, one other thing, and this happened during another day I was trading. Here's the cash market or the swing market. And I put it on a 3-minute chart so you could see this run. So you've done that trade, and notice how the market. Now this is 8:30. Remember we saw after about 8 or so the market starts going sideways, and sometimes it will. This was 8:30 Central Standard Time, which means it's market open right here. So what you'll often see when you'll watch things like this is you'll see right at the market open, you'll see a follow-through with a move. Now, if you know anything about moving averages and charts, this is called a fanning effect. If this 200 kept continuing down here, you would actually see that we were coming off that 200 moving average to go long. This is a phenomenal trade. This happened about 2 or 3 weeks ago, and this will happen a couple of times a week where you get the market moving off those moving averages. Now, I could either at this point at the market open do an options trade, or what I could also do is do a futures trade. But you can see that this is a really nice trade off of that 3-minute chart. And again, here you can see the 200-day moving average. By the way, just so you know what these are, this is an 8 EMA. Some people even like crosses between the 4 and the 9. I typically use an 8 EMA. This is a 13 EMA. This is a 20 SMA. This is a 34 EMA. This is a 50 EMA. SMA. The blue is a 50 SMA. And this is a 100 SMA, and this is a 200 SMA. So if you want to know what those are, that's 8 EMA, 13 EMA, 34 EMA, okay? So 8, 13, and 34 EMA. I like to watch these moving averages, and then the 20 simple moving average, the 100 simple moving average, the 50 simple moving average, the 100 simple moving average, and the 200. So sometimes people ask, and I can't see the chat while I'm doing this. And again, and these are, this is actually different lines that I calculated, and you can see how this is actually my pivot point after the first hour, and it goes up to the next line, but you don't need all that. Also, as I said, consider using options for day trades. If you're an option trader and you don't know how to trade futures, and so you can't do that pre-market cash market, pre-market before the cash opens, think about doing an option trade, a day trade on the option. And I used to mess around a lot with different stocks like Apple and stuff. I will do like strategies, like iron condors and such on stocks. but I love doing this with the SPY. You can even use the SPX, like I said, if you want. You can use either one. Sometimes the spreads are a little wider in the SPX between the bid and the ask, but you can do either one. And again, same thing. Think about going long after the cash market opens, considering follow-through of the market to an extreme high greater than the point of control in the 200-day moving average, again on a 2 or 3 minute chart. So again, same type of strategy. I'm keeping this very simple. Same strategy, but now we're going from an extreme low to an extreme high, so it hits that 200-day moving average. Now, it could bounce and go back down. That would mean it's a short. But if it follows through to the upside and it goes back to, let's say, a previous high on a daily chart or an hourly chart, and this one I believe actually was on an hourly chart, a previous high from the day before, you could just go ahead and go in there and buy a call spread or sell a put spread, because remember, you can buy a call to go long, or you can sell a put, or you can do a put credit spread. So you do either one of these trades. A lot of times I'll do a credit spread if I'm thinking about turning this into a longer swing trade. Most of the time I'll just go in there and buy a call. But you could do a put credit spread as well. Why would I do a put credit spread instead of a naked a put? Because you use a lot less margin when you're doing a put credit spread than you're doing a naked put, and you'll still make almost the same amount of money without having so much held in margin. So with people who don't have quite as much money. Also, one other thing I do have to tell you, one beauty about futures is the day trading rule of $25 or more in your account does not apply to those futures accounts. So the one advantage of that is, let's say I was doing this call trade and I had less than $25,000 in my account, after I've done it like 3 times, that's basically 3 round trips, they're going to tell me you can't trade anymore for the rest of the week. But still, if you did this 3 times a week, that wouldn't be bad. Actually, I think that's not bad at all if you're an options trader. Many people have more, 25,000 more. And also, you know, it's not hard to trade the futures at all. It doesn't take much to learn it. For a simple strategy like this, I do not get fancy. And I don't get fancy on this, and I'll make these slides available to you guys if you want to look them over with more time. That's fine. And basically on the short, I want to watch my time here. I'm basically doing the same thing. And again, I look at Renko and volume profile charts, and they can help me identify and confirm targets. So a lot of times I look at those volume profile charts or Renko chart because these are more volume. Well, they are volume based, and it can kind of give me an idea of where my target might be and help me confirm my target. During the day, if you're in the room with me, you'll also see one of the guys in there, Roy. He'll talk about Murray lines. They're almost kind of like Fibonacci's in a way, but we'll look at those as well during the day. But I want to keep this simple. You don't need to know a whole lot to do this trade. It is a very effective trade, and that's why I'm sharing it with you. Now, I'm part of this group that's called Traders Den 24, and basically the methods we all teach and we use are fairly simple. KISS, the old KISS method, keep it simple. We trade fairly simply. We have a team of experts. We actually, the first Tuesday of the month, each one of us does a webinar, sometimes up to 2 hours, and we teach different techniques to you. In the morning when I do this, if people have questions, I'll actually ask questions about this trade. I will also actually show this trade sometimes on a Tuesday evening. I'm also an options trader too, so I'll do both. John, often one of my former students, John, does the options just because I'm limited in time. But basically, it doesn't make any difference what your experience level is. We can help you understand the markets. And we believe that every trader should really have an understanding of the night and the day market, whether or not you trade them. Notice I was talking about the DAX or the European market. In the mornings, I'll look at that DAX market when I'm trading futures. It's one of the things I look at kind of like as a standard, because who's been running the market overnight? Europe, and Germany's a stronger market in Europe. We're going to offer a trial. And get ready now. This is the knock your socks off thing here. You don't typically see like this. We are not a group of people who make money off of courses. We are traders. Every one of us in there have been traders for a while, and this whole Traders Den 24 was designed by a great guy called Bill Kosterides, basically just so traders could come together and teach each other. We're a very unique group of people. we used to joke around and say, have 30 days to change your ways. If you don't change your ways in 30 days, you're probably never going to change them. Actually, there's a psychological principle on that. If you can actually develop good habits within 30 days. So with our little trial, you can get 30 days of access to the Trader's Den 24 room, and you just won't do what I'm doing here. There's 5 of us in that are trading 24 hours a day. So any time of the day you're there, there's someone trading, and you actually can just fish along with them. What we've kind of come to the conclusion is, I used to always have that belief system, let's teach people to fish, let's teach people to fish. Well, that's great, but we don't want people to starve in the meantime. So we kind of got the idea, we're just going to fish for you, and hopefully while you sit with the good fishermen, the fishermen can learn another fisherman's techniques and become a good fisherman themselves. There's a on-demand course, which is an introductory course that we give, I'd almost say for free. Every Tuesday there's a trading class. You can get it live, or if you can't be there Tuesday evenings, it's on demand. Typically we use Central Times. We talk about market times kind of around the clock. We talk about indicators. I talked about a few of those, and trades from different professional traders that we have in our group. We always look for low-risk, high-reward trade setups. So all of our trades are to keep risk low. Good traders keep their losers small and their winners big. And I actually do a human performance of trading seminar, and I really try to drum that into your head. And we talk about useful tools that we use, trade signals and indicators. Now, if you would like to sign up for this, you go to www.tradersden24.com/gain. Now, and if you could type that in there for me, please, in the room, that would be wonderful. Otherwise, I'll do it. It's www.tradersden24.com. Didn't mean to do that. And this is our schedule, okay? I'm there from 5 a.m. to 7, and really I stay there right for the whole morning till about 10 a.m. I'm there trading. I'll be commenting. Sometimes I'll say a joke or two. Typically Roy or Harry takes over right around the market open between 9 and 9:30. And I'll trade E-minis in the morning. I'll trade ES in the morning. I used to trade the Russell. Now I don't trade as much, but you get some really good trades off of that one. I've been trying to stick to the E-mini because we have a lot of new traders there that are learning the E-mini. Bonds have some great setups too. So I trade different things in the morning. And I might mention, if I start seeing a setup for the day, I'll mention an option trade setup that you could actually take later during the day or in that morning. And by the way, John Andres, who's there too, he actually has about 40 trades going at any one time of different types of spreads. He's a guy who was one of my students, took classes for me. He's dynamite. And so he even does other trades. I've kind of limited myself to these day trades because of just my time. My time is very limited. So basically, in the morning I'll trade, and then we trade the E-mini, the S&P, the NQ, with a lot of different things after the cash, kind of as the cash opens. And then we look at all indices later. And then in the afternoon, John will spend an hour with you talking about his option setups that he's setting up. Some are swing trades, some are a little bit longer trades. He gives you his spreadsheet with all the trades in it. And then in the afternoon, they'll be doing some like E-mini or futures. I believe one of the Roys, we have 2 Roys in there. We call it East Coast Roy and West Coast Roy. And basically what we're doing is we are actually professional traders. We trade with our money. So every time we mention or tell you we're taking trade, or you see one of our trades, it's the real McCoy. This is not, fake stuff. And then Bill Costridis, who started the room, he's our night trader. He comes on in around 6 Eastern, 5 Central, and he'll be there till 3 a.m., and he'll take you right through the Asian markets. And let me tell you, this guy does a lot of nice trades. I often miss him because I'm running late. I would almost be better off not seeing patients late in the evening and come do these. Bill will get trades off almost every night. So there's trade. I mean, if you stay in the room, some of these guys, I mean, some of the people are in the room, I can't do what they do. They take naps and they stay up all night long, and they're cat napping all long. But I'll tell you, some of these guys are retired and they have time to do it. Also, there's another bonus here. There's a 2-hour options course that I give that is on demand. It's not live, but on demand. You're going to get this free with our trial. Now, get ready, because you're going to get the Trader's Den online. You're going to get the 24-hour trading room. We have these new extended hours. We're now going, I edit the morning hour in. We have our education sessions. We're trading all the time. We have video archives. You wouldn't believe what's being offered there. You can sign up today for a 1-month trial for $9. You can watch what I do. You can watch what everybody does. I mean, gosh, $9, guys, you can't even get a good dinner for $9. And I'll tell you, I would treat yourself to this, or ask your spouse if they'll treat it for you. If you know anything about options or futures, you want to hang out in this room. I actually know people hang out in our room and another room at the same time because they don't want to miss our trades because ours are so straightforward. After the first month, you automatically renew at $147 a month. I can tell you, if you talk to some traders in there, I don't want to make any claims, but they more than make up that $147 a month. And there's some people who've been in this room. I actually joined the group in the fall because I was working with another group prior to that, and we had some family illnesses, and so I wasn't really doing much with anyone or teaching for about a year or so. A lot of serious stuff was going on, but I'm back. Blue Horseshoe's back in the building, basically, and I've been doing this with these guys, but this room's been going on for about 2 years now, and I became the morning guy because I needed someone to do the morning. Anyway, it's www.tradersden24.com/gain. You can sign up for it 30 days for $9. You can even, and you get this course anyway. That course will start to make you understand options. It's a basic introduction. If you decide to just trade options with John, you just got your primer on doing that, and you'll learn how to make some really good cash with this particular options trader. So I'll put it back up in there. Here's the main thing that we have, and you can go ahead and sign up for it. Just click here to get it all up in there for you. And I would encourage you to do this. You got nothing to lose for $9, and I'll tell you, you will not regret